Hello, and welcome back to my channel. I've talked in the past about house hacking and how you can use FHA loans. I even made a video on the changes to the FHA loan program in 2019, but I haven't made a video detailing exactly what FHA is and how you use that loan. But before we get into it, please like this video. It does help boost my video, who sees it and how it performs. And then also subscribe if you haven't already. You won't be disappointed. I don't put out clickbait videos or videos for just clout or views. I make sure that I put out information that's really honest, and I try to be as transparent as possible. I show you the ups and downs of the real estate business. So it's a really helpful channel if you're just starting off or if you're interested in getting involved in real estate investing. Okay, so now that's out of the way, we can jump right into exactly what the FHA loan program is. So an FHA loan, by definition, is a mortgage that's issued by an FHA approved lender and insured by the government agency, the Federal Housing Administration, hence the name FHA. I know in my videos a lot I refer to it as a government loan. Technically, it's a lender loan and it's insured by the government, so I should start saying government insured loan. So the idea behind FHA is that it essentially helps break down one of the biggest barriers to a lot of first-time home buyers or just people who are looking to purchase a house and they're in like this medium to lower income range. And that big barrier is a down payment. For a standard mortgage, you have to put 20% down to purchase a property, and 20% can be very hefty. Even if you're looking at a $200,000 house, that means you need to have $40,000 saved up to put down on this house. So FHA eliminates a lot of that barrier. If your credit score is above 580, you can put as little as 3.5% down. The nice thing also about FHA is that it does make exceptions for people who do have lower credit scores. So if you're in the range of 500 to 579, you can still get approved for an FHA loan. You would just have to put down a bigger down payment, like around I think at least 10%. Whether it's 3.5% or 10%, this is still a lot lower than that standard 20%, and this can help you get into a home faster, start building equity, whatever you want to do. Before we jump more into the exact details of FHA, I want to describe what FHA is not.
Snot. Sorry, it sounded like you said it's snot. I'm so sorry.
So FHA is not just for first-time home buyers. I think a lot of people get confused, and I think also the initials FHA make people think it's like a first-time home buyer program. Well, it's not really at all. You can buy it as a first-time home buyer, but if you still qualify and you bought a house in the past with FHA, you're not necessarily taken out of the program. You can buy another house with FHA if you still meet those credit score and net income requirements. However, the caveat is you can't have more than one FHA loan in your name at a time. So if you do have another house with a loan still on it, you haven't paid it off, you will have to refinance that loan before you purchase another home with an FHA loan. My recommendation is waiting till you have that 20% equity into that house so that when you refinance, you still aren't paying that PMI. And that leads to my second point. FHA is not a way to get out of PMI, unfortunately. While PMI stands for private mortgage insurance, FHA actually does have its own version of mortgage insurance, and that is what's insured by the government. So technically it's not a PMI, it's just like mortgage insurance, but it's still something that's added to your payment to insure, because you are a little bit more risky if you're not putting 20% into that down payment. The third is that FHA is not going to fund all of your business real estate investing hopes and dreams. FHA is not something you can use on single family rental properties. It's not something you can use on investment properties in general or commercial properties, unfortunately. Lenders and the government want to be helping put people into homes. Homes and house values are a big chunk of the U.S. economy, and it's a big measure of the health of the U.S. economy. So they want people to purchase. They don't want people to be renting for their entire lives, but they don't want to be funding a business. There is an exception though, and that's house hacking. If you follow me, you've probably already seen my videos on house hacking. You know that I use house hacking to fund my real estate investments, so that's the only exception for FHA. If you want more information on house hacking, I do have 2 videos linked below detailing my personal experience with house hacking and the exact details of why house hacking can eliminate your living expenses and set you up for financial freedom, as well as essentially helping you kickstart your real estate investing. Another way that you're deterred from using FHA to finance your business is that when you buy a house with the FHA program, you have to live in that house as your primary residence for at least a year. Well, it's kind of a gray area as to how they like check to make sure you're not abusing the program. If they do find you are abusing the program, you're using it to fund sole rental properties, places that you don't live in, they can revoke your loan essentially. And nobody wants that. So just be honest with the system. If you are using it and want to use it as a rental property, use it for a multifamily property and house hack. That's one legal way to get out of, just using it for like a primary residence. So don't abuse the program. Again, house hacking is the only legal way you can use FHA to finance rental property and real estate investing. So stick to that avenue and don't try to cheat the system. Another thing to note is that while traditional FHA loans don't cover, rehabilitation projects, a house like a fixer-upper, you can get an FHA 203K loan. The 203K loan is a loan that helps cover the purchase of the house or the refinancing of a house, plus rehabilitation costs. In order to qualify, the rehab costs have to be at least $5,000 for it to be worth them servicing the loan. But there also is a cap. It just depends on what your area is. Their FHA loan requirements do vary area to area based on, local economies and household incomes in that area, etc. And one more thing that I'll talk about in this FHA 101 video is how to find an FHA approved lender. The nice thing is that it's actually not that hard. Most mortgage companies and lenders do offer FHA loan services. Again, they're backed by the government, so that reduces the risk for them. So a lot of lenders nowadays do provide FHA loans. You can do your own research and Google and call different lenders and see if they offer the program. If you do want to just be double sure to make sure a lender isn't being shady, you can actually check for approved lenders on the HUD's website. I'll have the link in the description below to the HUD lender search, just so you can double check and make sure you're working with an approved lender. So that's all I have for you guys today. Thank you for watching. I know I ran through that very quickly and there was a lot of information, so if you have any questions, please comment below. If you haven't already, hit the like button, hit the subscribe button, hit the notifications button, comment any questions, any comments in general, anything you have to say that's nice. I don't like mean comments, so I would appreciate nice comments. And this video was actually born out of comments that people leave. If people have questions about, certain programs or anything I've talked about in a video, or people even suggest videos for me sometimes that I had never thought of, and it's like a great thing. So please give me suggestions, and please if you have any questions, please let me know, because there might be other people that have the same question and they're just too scared to ask. So with that being said, thanks for watching, guys. I really do appreciate your support, and I'll talk to you soon.